This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is one advisory, but it's broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. Basically, you get all three for one. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for the week ahead. And actually, in this video that begins with Monday, November 23rd, 2020, I have four charts I want to take a look at here. It's a short week with the U.S. Thanksgiving holiday on Thursday. There are shortened electronic sessions Thursday and Friday. So these four charts I want to take a look at. They may not set up as trade opportunities for this week. It may take next week after the holiday, but I want to get these four in front of you so we can monitor them for potential trading opportunities. But before we jump into those charts, please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Okay, jumping into the first chart. This is the December 2020 Australian dollar. Again, if you take a look at my chart here, I don't have a strong formation in place yet. The Australian dollar seems to be finding some strong resistance, though, near this 73.50 price level. With the recent highs in November and going back to September, we had this dip in October, but we're right back to that level. So I am looking for an opportunity to short this market. I think the 12-month contract high will be its strongest resistance level that we can place stops above that level. That high is 74.16. But right now, you have the moving averages, a 20-day, an 89-day, a 50-day, even a 200-day down here, angled up. I want to see those hook over to the downside. You're already seeing the MACD indicator. This is my trend indicator showing that the trend is waning, looking like it's turning over. Same for my MACD indicator. This is my stochastic indicator. This is a momentum indicator. It's already showing that there's some downside momentum in the market. So I'm just looking for some sort of a formation to set up to be able to take on a short position. Like I already talked about, potential stop losses above the 12-month contract high, or even this strong resistance level. Downside target, potentially the 68 price level, or the 200-day moving average at 68.45.3. So that's the December 2020 Australian dollar. Nothing set up just yet. Second chart is March 2021 Chicago wheat. Again, not a strong formation. I have the beginnings of a pennant formation, though there's not enough touches for my liking. You want at least 2 points, make a trend line, but you really want more than to have a strong confirmation that it is a trend line. Trying to draw this up here, it doesn't hit this 12-month contract high, so it's a weak pennant formation. It's more of a range. We're within this channel here with the 12-month contract high. Let me get that for you. That is 637 3/4 from October 21st. And you have these lows. Let's see, this lowest low here is 589 1/4. That was made 10 days ago on the 13th of November. So looking for an opportunity to go short this contract. But right now, you can see the momentum is up in this market. Again, this is my stochastic indicator. And the trend is rather flat. 20-day moving average is pointed down with a 50-day pointed up. And your 200-day moving average is flat. So all of that together, you have a sideways trading market, and that's obvious with what we've seen since the beginning of October, even though we've had some big ranges, and we're kind of getting into that period here. After our U.S. election, going into the holiday season, there'll be less market participants, so there'll be potentially larger trading ranges, though we are in a range here. So looking for an opportunity actually for this just to trade up a little bit higher and set up a shorting opportunity to get short. I'd like to see an opportunity before this 590 level, so maybe a trade up into here reconfigure this trend line, have a stronger trend line in place, and then look for an opportunity to break the lower trend line. So that's the March 2021 Chicago wheat. Moving along to the third chart, this is January 2021 soybean meal. I've had this chart previously on the Beyond the Spotlight. Market's been parabolic, trading, practically straight up along this trend line, going back to the end of August. But you can see now we have a strong resistance level up here. That 12-month contract high was just short of the 400 price mark at 399.8 from November 10th. So I'm looking for a close below this lower trend line to set up a short opportunity. You can see the MACD is relatively flat, but looking to turn over. Same with the stochastic indicator, momentum indicator. It's flat, but looking like it's turning over. 20-day moving average starting to wane a bit. 50-day is kind of straight up. 200-day waning a bit. So I like to see it close below this lower trend line. And then we'll look to set up a short trading opportunity with a stop loss above the 400 mark. Potential downside target is the 50% Fibonacci retracement of this move from low to high, which comes in at 342.80. That would be the first target on this trade. And the fourth chart I want to take a look at is March 2021 sugar. I have again a market where I want to short the contract. Sugar found a little bit of resistance up here at around the 1560 mark after breaking out of this last range. Certainly has potential to do that again, trade in a range, and then take out that 12-month contract high. I only want to short it if it takes out this pivot point low and this 20-day moving average. The 20-day moving average is at 1490, and that low is 1487 from the 20th of November last week. My momentum is down. The trend looks like it's turning over to the downside as well. So this would be setting up a trade with a momentum entry technique. Following the momentum to the downside, selling on a break of this low. Stop loss would go above that 12-month contract high. There are many potential support levels, but I'd be keying in on this support down here at 1295. It's also near a 200-day moving average at 1295. So that would be my target on a downside trade in the March 2021 sugar. So Trade Spotlight's it's an email service directly to your inbox. You get the timestamp when the trade is sent out, a write-up of the trade, the precise entry and exit orders, so you know the risk-reward parameters, any pertinent information that's necessary, like margin requirements to trade the opportunity, and a chart that you can click to enlarge. If you're not following Trade Spotlight, I encourage you to do so. Go to the Daniels Trading webpage, click on Advisories, and under Technical Analysis, you'll find Trade Spotlight. You can see a write-up, review some recent posts, and subscribe. It's a free resource to clients of mine in the firm. Otherwise, you can do a 90-day trial offer, and then there's a quarterly fee. Here is all my contact information. If you have any questions on the charts I discussed today, or just the markets in general, you can call, text, or email. Thank you for taking the time to listen to this video today, and happy trading.